Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, where news momentum is leaking away from world economic growth. Firstly, in early afternoon trade, the S&P 500 index on Wall Street was down another 1.4%, although it has clawed back some of that a little later to be down just 0.3%. This follows European markets, which were generally down. They were down 1.5%, who in turn followed Tokyo, which closed down 2.1%. Hong Kong was down 1.2% and Shanghai was down 0.8% yesterday. Australia closed down the most at 2.3% lower, while the NZX was down 1.2%. It is a sea of red in equity markets, and today's Wall Street drop suggests that it's not over yet. So far, the S&P 500 is down 4% from the start of 2018. The US's biting trade policies are behind the overall move lower, but the imminent failure of a key vote on Brexit in the London Parliament isn't helping either. In Canada, even though building permits issued dropped slightly in October, new housing construction rose much more than expected. And in India, their central bank governor has quit over bold political interference in the management of monetary policy. The Indian currency weakened more than 1.5% on the move as financial markets worried about the impact of loose inflation targeting, something India struggles with anyway. The OECD has said that momentum is leaking away in the growth in all its main member countries, but New Zealand stands out as going against this trend, and only India amongst the non-OECD countries comes close to our momentum track. And the departing IMF chief economist also has warned that the air is coming out of the balloon of growth, especially in the US. But he was careful to say he is not predicting a recession yet. In Australia, a new report by competition regulator at the ACCC has found concerns regarding the market power held by Google and Facebook, including their impact on Australian businesses and in particular on the ability of media business to monetize their content. The report also outlines concerns regarding the extent to which consumers' data is collected and used to enable targeted advertising. This report will be influential internationally, and the two firms targeted are expected to push back hard. And staying in Australia, a cut in interest rates could not be ruled out, a senior central banker said late yesterday, but he emphasised that the next move was still likely to be a rise given the expectations for a gradual acceleration in inflation there. The US Treasury 10-year yield will start today at 2.85%. Their 210 curve is just on 14 basis points. Gold has slipped $4 today to $1,244 an ounce. US oil prices have reversed their rise and slipped today to be just under $52 a barrel. The Brent benchmark is now just on $61 a barrel. And the Kiwi dollar is starting firmer again today at 68.8 US cents. On the cross rates, we're up almost half a cent to 95.7 Aussie cents, and also firmer at 60.5 euro cents. That puts the TWI up to 73.5. We should also note that we're at 54.7 UK pence, which is our highest against that distressed currency since September a year ago. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.